One of Wall Street's most bullish strategists says a stock market correction is imminent. In today's video, we need to give you an update on Tom Lee, an American entrepreneur, one of Wall Street's most bullish analysts' prediction on the overall market. He previously said that a stock market correction is imminent, and we ended up covering this on February 10th, 2024, as soon as the article dropped. Thomas John Lee, commonly known as Tom Lee, is an American entrepreneur, financial analyst, strategist, investor, businessman, and full-time contributor on CNBC's Fast Money, Tech Check, Halftime Report, and Closing Bell shows. So he is quite the guy. What are his predictions? Did they hold up? And what is to come around the corner? So he says a stock market correction appears imminent after the S&P 500 rallied 21% over a 14-week period. He said that history suggested the market was about to reach a short-term peak and that the S&P 500 may reach 5,000, maybe a little higher, but a drawdown follows. He ends up quoting that a drawdown will follow a couple or a few weeks later after the March Fed meeting, when the Fed says that they are probably not going to cut rates. How many weeks has it been since then? A couple weeks, right? So it's time to update on what his prediction was, what had happened, and where are we going to go from here? Because the SPY is sitting well above 5,000, sitting at 518 or 5,180. Now, a couple things to note on the SPY on the daily time frame before we touch on the weekly time frame. We broke below this aggressive support trend line, came down, and are now holding some crucial support levels. Nothing is validated just yet that we are seeing a correction. However, if you take a look at the MACD, the SPY ended up crossing back here, gaining momentum, crossing back to the downside ever so slightly on this slight correction, scaling back up, trying to test the downtrend, again, and then eventually entered this downtrend right here, broke back up and tried to retest uptrend momentum and ended up getting stopped not once, not twice, but 3 times, which is not something we want to see. We almost saw a triple top on the S&P 500. Okay, so Lee looked at market history and found 7 instances from 1927 when the S&P 500 rose 13 out of 14 weeks, as it just did. In 4 of those instances, the stock market peaked within 2 weeks. He said an imminent market correction made sense because it would mimic a stock market trading pattern that occurred during the bear market low in October of 2022, where the stock market jumped over 20% for 16 weeks starting in October 2022 before it staged a 9% correction, then rallied over 20% again for 19 weeks and sold off by 11%. After the S&P 500 has risen how it just did, a drawdown would not be out of the ordinary. If we take a look at the overall market from that October 2022 low, the stock market actually risen 28% before correcting 10.6%. We can see that right here. This was the scale higher, this was the scale lower. Okay, from this low that it hit back in October of 2023, after that full year, the SPY has been up almost 28%, 27.91%. Given that same exact trajectory, the SPY would fall down between 475.50 and 463.50. In my opinion, this is a likely scenario that could happen over the next few weeks and or few months. And this is also important with what the Fed ended up saying. Even back during the COVID crash, when the SPY rallied up 28%, that was the first time it started to eventually see weakness. But of course, it was oversold and didn't end up correcting. Now, this is all going to depend on what's happening around the market, what the Fed is saying. Previously, the Fed announced that they may not actually be cutting rates until they see inflation where it needs to be, and it's not getting to where they want it to be, which means those 3 cuts they were anticipating, from 8 cuts down to 5 cuts down to 3 cuts, may be down to 1 or none for the year of 2024. With that being said, that may affect the overall market. Every single meeting we go into, getting this narrative that the Fed is actually hawkish. Not only that, but if Tom Lee is correct, this would be very scary for the crypto market. As many of you know, the Bitcoin halving is coming up in under 15 days. And if we look, the stock market has peaked around the same exact time Bitcoin peaked, made this sort of second top here like it did just now. And if that is the case, the market is peaking, Bitcoin is peaking, that could show a sign that Bitcoin may be peaking as well as other crypto plays. Now, just to finish off the negative side, the bear case scenario, the market is also held up by a few stocks and not the actual 500 that are in it, the top 500 companies. It's actually held up by Microsoft, Amazon, Meta, Google, Nvidia. They are pulling all the weight, especially in Nvidia. So once these tech sectors end up coming down, it's going to pull a lot of money out of the overall market. Last but not least, war tensions are escalating. The US is on high alert and actively preparing for a significant attack within the next week by Iran targeting Israel or American assets in response to Monday's Israel strike in Damascus that killed top Iranian commanders. What happened during this entire sell-off of 2022? Lots of war altercations were happening. Now, on the flip side, the bull case scenario, institutional investors started adding more to the S&P 500. Now, this is taken with a grain of salt because they like to add more when retail is jumping in so they can pull early and take a little bit of profits. Who says that they aren't going to let go of these shares? Also, it's election year. What does that mean? It means that they are going to do whatever they can in power to prop up the market coming into the election so that the election is not affected. Now, I want to close out the video touching on Dogecoin for you guys as well as Tesla. But before we do that, speaking of the Magnificent Seven, or these top stocks holding up the S&P 500, I want to partner up with Moomoo and give you guys a fractional share of Apple, Microsoft, Tesla, Meta, Google, as well as Amazon and Nvidia for just using my link, opening a broker through Moomoo and making a deposit of any amount. It can literally be $1. They're giving you a 1.5% cash reward along with 7 free fractional shares of the Magnificent Seven stocks that are propping up the overall market. Well, maybe not Tesla, and we're going to get into that. But use my link at the top of the description, open a Moomoo account, and deposit into there. You're also getting level 2 order book data for free, access to trading options, going long, going short, and more. And if you guys want to, get in the Discord. The link is right under the video. You can join and come talk with me. Hey, Lottery Stocks, what about Tom Lee saying this? What about this? What about that? And you can also request videos. We also have options trading alerts in there. It's the best place to go. Best vibes. A coffee a month. Cheap Discord on YouTube. Come join it. You guys will not regret it. We will be excited to have you. Now, more earthquakes are happening. Earthquake magnitude at 6.0 hit Tonga Islands. This comes after the New York one. A lot of people are saying that earthquakes tend to happen coming into the solar eclipse. That also taken with a grain of salt. Now I want to touch on Dogecoin really quick. Dogecoin RSI was extremely overbought up here. It ended up selling off, cooling on the RSI, making a higher high, coming up to the overbought region again, coming down to the same level the RSI cooled at previously, and now it is building support, retesting the EMA here. Dogecoin is looking extremely bullish if it continues to make these higher highs and higher lows. Now, Tesla scraps low-cost car plan amid fierce Chinese competition, and then they also announced that they will reveal robo-taxis on August 8th. Tesla, as a reaction to this, rose up about 5% in after hours, but looking at it on the weekly time frame, this is what we've been tracking with Tesla. We've been looking at Tesla to be somewhere around here, where it would find major weakness and break major structural support levels to come down even lower. And I think in the medium term, that is the case for Tesla, especially because it is a rate sensitive company. So keep that in mind. Now, we did have 2 scenarios that play out for Tesla. One being this yellow cycle, which is the bull cycle, bottoming out, playing pretty similarly, right? Coming up, testing that major resistance level, which was once support, coming back down, and then starting to rip higher. This is the bull case scenario for Tesla, and it looks like it could be playing out. However, the bear case scenario makes up the same exact argument. Coming down, chop trading down here, testing that resistance level, which was once support a few times before selling off even further. Both of these are both valid as of right now, and overall we're just waiting for direction on Tesla. But that is what I got for you guys for today's video. Hopefully you enjoyed your weekend. I dropped the earnings in Discord, so if you want to play them, come in Discord, come talk with us. Both of the links are under the video for Moomoo as well as Discord. Let me know in the comments down below if you think a market crash is coming. Drop crash or drop rally in the comments down below if you think it is going to rally. I love you all. Lottery Stocks out.